Hi, Suzy, your Pacific Northwest real estate specialist, and today's topic I want to cover is all about earnest money. So I get this question a lot, especially from first-time home buyers. What is the earnest money? What happens to the earnest money? How do I go about deciding on how much to give as earnest money? So I want to spend a little bit of time this week speaking towards that. So basically, if you think of earnest money as a good faith deposit that a buyer is willing to put towards a home for a seller. So the seller knows that number one, the buyer is serious, and also that the buyer has some skin in the game. So before the transaction closes, you put forth this deposit. It generally goes into an escrow account with an escrow agent until the final closing and the sale of the home, okay? They hold it until the close. And then usually at the close, what most people do is they apply that earnest money deposit towards the down payment on their loan. But there are different options. When thinking about, and you want to speak with your trusted real estate professional, how much to offer as earnest money when you are making an offer on a home. Now, according to the National Association of Realtors, generally that's like 1% to 2% of the purchase price. In a hot market, it may be a little more. You just want to definitely talk to your real estate professional so they can help you decide, first of all, how much is affordable and you're comfortable with, and what the current market is basically asking for, okay? You should, especially as a first-time home buyer, you should have a trusted real estate agent that can help answer all your questions and is very patient and makes you feel good about your questions. Okay, so if you're wondering how earnest money works, basically, after an owner accepts an offer, okay, the seller is then taking their home off the market. And it basically stays off the market for several weeks until your transaction finally closes. During that time, the earnest money helps assure the seller that you are acting in good faith as the buyer and that you really want their home, and you provide them with some type of compensation if you as the buyer back out without a valid reason. There are valid reasons where you would get your earnest money back, and we'll cover those. Typically, the money is kept in an escrow account. It's held by an escrow agency, escrow company. It could be held by a real estate title company, or it could be held by the seller's real estate agency. Here's a nerdy little tip though. Do not give earnest money directly to a home buyer. And if you happen to be looking at a home that is for sale by owner, you still want to make sure that you have a buyer's agent on your side to help alleviate a lot of these things. There's still a lot of paperwork. There's a lot of fine print. So you want to make sure you have somebody in your corner helping to make sure all the I's are dotted and the T's are crossed, okay? Do not give money directly to a homeowner. The earnest money is dispersed at closing then, and most people either put it towards the down payment of their loan or towards closing costs. So it's not extra money, but it's money that's being held until the close, and then it's dispersed however you would like it dispersed. So then people ask, they get a little concerned and say, well, is earnest money refundable? Yes, it is. But the purchase agreement will include specific contingencies that outline the circumstances under which you can walk away from a deal and not forfeit your earnest money, okay? So if you have put earnest money deposit down and one of these contingencies happen, I'll give you 3 common contingencies for an example, then you will get your earnest money back. So for example, there's a mortgage contingency. If you at the end are unable to secure lending, let's say you put in the offer, you're pre-approved, everything's running great, and then you go and buy a car. And now all of a sudden your situation has changed and you don't qualify for your mortgage anymore. Then you're gonna get your earnest money back. Hopefully you don't do that. I've said this a gazillion times, but you don't know how many people still do stuff like that. Another common one is an appraisal contingency. So for example, you put in a purchase price of $550,000, okay? The mortgage and lender companies have their appraisers go out and they do an appraisal of the home, the seller's home, and let's say they came back and said this home really only appraises for $525,000. You've got a difference of $25,000 there. So either you can cover it, or the homeowner can lower their price, or you can both walk away. And if that ends up happening, you do get your earnest money back. Another regular one is an inspection contingency. When you purchase a home pending inspection and you get back the inspection report, let's say there are some things on there that you would like the seller to take care of before you take over the home, and the seller says no, and you don't want to pay for these inspection items that need to be taken care of. So again, you both part ways, you will get your earnest money back. So you want to work closely with your real estate agent to decide what contingencies you want to include in your contract. When you write the purchase, or when you submit a purchase and sell agreement, it will have certain contingencies on there as to what allows you to get your earnest money back, okay? Now, people also ask, when can a seller keep my earnest money? Yikes. So the seller can keep earnest money if you break the terms of the purchase agreement, such as you don't meet deadlines in the contract, you decide not to buy it because you find another property that you like better. Things like that, because remember, they've taken their home off the market for up to however many days it takes to close. So this is what your earnest money then does, is it compensates them for the time that their home has been off the market because you just changed your mind. A good way to avoid confusion is to have your real estate specialist walk you through the entire purchase contract, okay? This way, before you sign and submit anything, you make sure that you understand all of the ins and outs and in what circumstances you get to keep the earnest money and in what circumstances the seller would get to keep the earnest money. So I hope that helps a little bit. If you have any other questions about earnest money or any other real estate topics, please send me a message. If you find this useful, I would hope that you would subscribe, and I will see you next week.